And so we can see here the impact. But before I go in, those are the calculations. And so on your homework and on your quizzes, we're going to be going over a lot of that. Right? I'm going to have you drill all different types of FIFO, all different types of LIFO, all different types of weighted average, and specific identification. You need to know this for your midterms and final. This is important. I'm not only testing your ability to memorize this, but I'm also testing your ability to disseminate information and make allocations based off of one fact set and to think critically. So practice this. And the way you'll be tested on it is multiple choice questions, but you'll still have to, I could ask you a multiple choice question for any one of these steps, right? I could say on August 17th, what is your total cost of goods sold remaining available for sale if you use the LIFO method? On August 14th, what is the cost associated with this sale using the weighted average method? On August 30th, what is the cost associated with this using the LIFO method? And so on and so forth. So I could ask you an independent question related to any one of these series of transactions under any series of allocation principles. So that's where you need to know this information and be able to figure it out. And it'll just be a multiple choice, A, B, C, and D, but you're going to have to know each one of these steps to get it correct. So is there any questions related to this? Going once, going twice. That's heavy. That's some heavy lifting. So I'm going to give everyone a 10-minute break now. And then we're going to come back and we're going to talk about the impact from a tax method. We're going to talk a little bit more about tax accounting and how to apply it. And we'll go through a few more examples. And then we're going to talk about lower of cost or market, which, and now it's called lower of cost or net realizable value. And so we're talking about the tax consequences before we left off. This is a good illustration of the tax consequences and the financial statement consequences. And so you can see how the tax liability would change, how our gross profit would change based on it. So our gross profit could vary quite a bit from LIFO versus FIFO, how that ultimately impacts net income, and then would ultimately impact our income tax expense. And then also how our balance sheet would be represented too. It would lower, higher costs lowers our assets, which would change all our ratios we learned about, right? The current asset ratio, quick ratio, et cetera. And so we have to always be careful. And so we talked about these advantages, right? There's other advantages. The first in, first out, ending inventory approximate current replacement cost, right? From a reporting perspective, that's helpful to know that our ending inventory amount is about how much it would cost to replace the similar inventory. So it's a better valuation inventory mechanism. Like we know approximately the cost represents the fair value of the inventory generally. Last in, first out, it better matches the costs. Like in reality, we're probably going to sell our most recent goods first, unless we're a grocery store. Like we'll probably sell the new product will be the first one on the shelves. And so it might better match the current prices of goods or the current cost of goods with the revenue. And the weighted average will give you something in the middle. Also important to note, right? Tax accounting and financial accounting are very different beasts. They're just different. Like I have friends who are tax accountants. I'm not a tax accountant. I'm a financial accountant. I'm a technical accountant, but I would not do your taxes. I had to learn tax law in order to become a CPA, but it's not my specialty. So there's a lot of tax laws that like if you go into accounting, you're going to take 2 to 3 advanced tax courses. And then if you want to become a tax accountant, you actually have to take an internship in tax and you'll have to study tax independently. I can do taxes legally, but I'm not an expert by any means. So tax law requires that if someone uses LIFO for tax purposes on their tax returns, they also need to use it for their financial statement reporting. And that's why you see some companies electing LIFOs generally for the tax benefits, but they're only allowed to do that if it models their actual cost of inventory. So there's lots of laws around this. You'll eventually have to study it if you are interested in this method. We're not going to go into detail in this class, but know that tax law is a whole independent field of study. If you become a CPA, you become relatively a relative expert in 4 fields. You'll know more than the average person, significantly more, but then any one of these fields, you become a specialized expert within. So that includes tax and regulation considerations, audit, which I've talked about, financial accounting, which is my area of specialty, and then general business knowledge, business, including business law. And so you can become an expert in any one of these fields. But you have to know all of it to become a CPA. So one rule for accounting that always messes everyone up is that once we choose a policy, you have to apply it consistently. And so let's say I'm starting a startup hires you. This will be common in the Bay Area. They say, hey, we are making our first set of financial statements and we don't really care what kind of policy we're going to choose. We just want whatever's easiest. Your job as and can you make our policy for us? Your job as an accountant would be like, hey, wait a second. Don't choose this too quickly. We need to assess the impact, because once you apply it, changing it is extremely difficult, because we have to apply it consistently for the rest of your company's life. And making a change to an accounting policy is extremely difficult and costly. So slow down, and we need to make sure know that if you choose one policy, it's going to be applied the rest of your business's career, your business's life, unless we take a significant cost to change it. And so we need to consistently apply that. If we choose FIFO, we're using FIFO for everything. If we choose LIFO, we're using LIFO for everything. You can't pick and choose each transaction for whatever is most favorable for your company. And that's true for all accounting policies, and why we're needed at the front lines to make decisions. And so here's some examples. If we want to go over them after class, since there's still a lot to go through, we can, but I think you can follow them using the Google Sheets. So it would be that you're going to follow the exact same format, but just change up the numbers of, hey, during the sales, we need to be able to determine our cost of goods sold, our cost of goods available for sale, our ending balances, and what our profit would be on these sales. And so you can see it's all calculated. I gave you all the answers in the PowerPoint. We can go over it in detail if you'd like at the end. And so you need to know how to do it for this class. You need to know how to do it for the specific identification method, LIFO, FIFO, and weighted average. I'm going to give you questions for all of them on your midterm.